Our posturings, our imagined self-importance, the delusion that we have some privileged position in the universe are challenged by this point of pale light. Our planet is a lonely speck in the great enveloping cosmic dark. In our obscurity, in all this vastness, there is no hint that help will come from elsewhere to save us from ourselves.
It said the beat wasn't copyrighted. That's why I picked it. What if I pick another one? Am I gonna catch a copyright strike?
CJ Nonsense.
That wouldn't be fun.
CJ Nonsense. CJ Nonsense.
What's going on, everybody? What's going on, everybody? How you doing today? I am David. This is Lunar Beaches Crypto. I don't really have anything set for today. I didn't have a lesson planned, I should say. Because, well, I don't know if I was going to have this swim lesson today because my son got dedicated at church today. So that's why I'm late. But we'll still get through it. What I do want to do today is I want to go over top-down analysis. Welcome to the show, everybody. All right, so this is what we are going to do. I am going to do some top-down analysis. I want people to see how my brain works and kind of get a feel of how I approach the charts. And maybe you can find something helpful within that, watching me process price action. So, and I'm going to start with the monthly chart. I'm going to show how I break everything down from the monthly all the way down to the 1 minute chart. Monthly all the way down to the 1 minute chart. And to start that off, let's just go ahead and say, let's get our time intervals down. So when I'm trying to find a bias in the market, bias being, is it bullish? I want to know, is it going to be bullish midterm? Because if it's bullish midterm, then what I'm going to be looking for is scalp longs and then fading price back down in the retracements. Hello, Alex. Good to see you. Win Moon. Soon. But it depends on your interpretation of moon. I don't know what moon means. If that means new all-time highs, I don't know. We'll have to figure that out, or we'll just see when that happens. But right now, we've got to break down what we have in front of us for at least, the next coming months or so. You would love to see my higher targets? You will be doing a video on that later. Didn't want to interrupt your stream. No, you're good, bro. I come on your stream all the time. Well, I'm in your chat all the time. Thank you for coming. Don't forget to hit that like button. Also, it's the #1 way to boost my channel in the YouTube algorithm is hitting that like button. And also subscribe if you are new. Welcome, Melissa One Love. Glad to see you here. You slapped it. Good job. Good job slapping that like. Now, what are we going to do? So I want to look up my time intervals. And what I mean by that is every interval is going to be married. We're going to have a high time frame, and then we're going to have a low time frame for where we are looking for our entries. My high time frame helps us set up our bias. Are we bullish or are we bearish? And our lower time frames are where we make the plays. Hopefully that makes sense. If it doesn't, hopefully watching this, and as I go through this analysis, hopefully that helps you understand what I'm talking about. So first, we need to go over what pairs or what time intervals are paired with each other. And for me, this is how they go. And this is why you see these the way that you do up here. For me, it starts with that monthly chart. Now, that's ugly, so let's get rid of that. And let's scrunch this up a little bit, scrunch that up a little bit. So it starts with the monthly chart. And then my lower time frame on that is going to be the weekly. I go from the weekly, my lower time frame on that is going to be the daily. I go from the daily down to the 4 hour. go from the 4 hour down to the 15-minute. This is where, instead of going like a snake, this is where it gets different. Then I will use the 1 hour. So we'll take the 1 hour. That drops us down to the 5-minute. And then the 5-minute, 15-minute, I should say, we skip one. 15-minute, and then marry that with the 1 minute. Yes, 1 minute. Ooh. So that is, let me get, oh, that's an hour. Let me get an H in there. Let me get an M in there, and M in there, so we know 1 minute, 1 minute. All right, so these are our high time frame intervals right here. This is our high time frame, and this is our low time frame. So what's happening on the monthly, we break down to the weekly, and then we from the weekly down to the daily, from the daily down to the 4 hour, from the 4 hour down to the 15-minute, from the 1 hour down to the 5-minute, from the 15-minute down to the 1 minute. All of that to say, or to start, let's go ahead and start. I don't know why I'm doing all of that when I could just right click and remove everything. All right, so let's go to, we're already on the monthly. This is the Coinbase chart. So first I want to establish some history here. And the first thing I'm going to do is I'm going to take the candle body of the candle, the monthly candle that closed above this high here. You see that high? So once again, we always start off with our market structure. We want to see monthly where we're at on our market structure. No break of the low here until we get down to here. Then we have a green candle, monthly candle here. We get our high up here, and then we pull down. So what we're looking for is a break of this and a close above it. This one broke above it, did not close above it. This one broke above it and closed above it. So I'm going to go with that one. Really, this is my high over here, but the importance is this is the candle that I'm looking at as my basis for, okay, now we've got a clean break and we've held and closed above this high. That is what is important to me. This was very indecisive, and we even fell lower because of that. Fell down candle. Now, the important thing with these is the midpoint, which I just found out today that the rectangle, they have added a midpoint to it. So if I pull out a rectangle, you can come on here, click on middle line, and it will automatically add a middle line to it. You no longer have to draw a fib to find the middle, which is amazing. So because this one broke, I want to draw a rectangle on that candle. Just the candle, not the wicks. Pull it across. And as you can see, we did get a reaction here. Now, what I'm looking for when I see this, when I have this monthly candle like this, what I'm looking for is for price to hold above that midline on the weekly chart. Because we're starting off with the monthly. Now I want to bring it down to the weekly to see where we're at with price action. So I'm going to drop down to the weekly, and then we can see that we did dip below, as you can see, and we saw it on the last one, but we did dip below that midpoint. However, we continued to close above it consistently, kept spiking below it, but closed above it. To me, that screams bullish. That's just screams bullish to me. So we're holding this breakout candle here. We're holding that midpoint of the candle, of that monthly candle, throughout the next few months. And then we finally get a breakout, and we are close, 5 hours away, to closing above this candle here. I would like to see a candle close above this, but this one will work for now. Now we do have, if we can close above that right there, that would be fantastic. And I would expect continuation. However, we might see a pullback before we see that continuation. So the pullback, so this next week, what I'll be looking for is I'm going to take this wick right here, because it's the tallest one on the chart, tallest wick, and I'm going to find my midpoint of that wick, because that is going to be my basis for my draw this week. I'm going to be looking for that. Let me go ahead and get rid of the monthly chart. We're down to the weekly chart. So now I'm looking at the weekly, and I'm trying to think of what I want to see. Now first, do want to get my high and my low on my weekly chart. So I got my low wick down here, my high wick up here. I'm going to draw that down. All right. This is our weekly wicks. The wicks, the candle bodies tell the story. The wicks do the damage. But the wicks is where liquidity lies. That's where our liquidity is, down there. The next one up, the closest liquidity, is this one right here. Now, this previous week, I want to point out that I posted either in my Discord or Alex's Discord. Go follow Alex, Alex O Crypto. Make sure you follow him. I should have a link in my description. If I don't, someone tell me. But yeah, last week I said if we get love you too, bro. If we get a daily candle close above the midpoint of this wick on this candle, that's what I was looking at last week. If we get a daily close above that, I would expect continuation to the upside for the week. Drop it down to the daily. We're going to go to Monday. Very first day of the week, we get a candle body close above the 50. Did we get a pullback? Yes. But then we got our Thursday reversal that sent us back to the upside. This close right here had me bullish for the week because we got that daily candle close above the midpoint of that weekly wick, which also happens to be on the daily too. Pretty close. It's a little bit lower on the weekly, it looks like. Doesn't matter. Held it and then continued higher. Beautiful. The fact that we held it, probably the next dip, I probably should have longed. I really wish I could sit at the computer all day, every day. I just can't do it, but it is what it is. So we got that close there. Amazing. Sends us to the upside. This one, to me, gets negated and is invalidated because we did close below it. Very next day, we took it back, though. Keep that in mind. Very next day, we took it back. And then we continued higher. So, obviously, you can tell that these midpoints of these wicks are kind of important. So, we've got to always be paying attention to those wicks. Now, for the coming week, let's go back to the weekly. This is our upside target. I'm going to get rid of this. This is our upside target. Now, I negated that downside target. So, coming into this week, I'll be looking to see what happens up here, if anything, if we even come up here to the midpoint. If we don't, looks like we're getting rejected as it is, as it stands, by that wick. We've tapped into it a little bit, but it currently looks like we're getting rejected by it. So first thing I see is a fair value gap right here on the daily chart. And like I said, I'm just basically doing this on the fly. So I see this fair value gap here. I'm going to drop down to the 4 hour and see what I need from that. Now, what I would like to see for bullish continuation is for price to come down, not close below this line here. Now, if we do get a 4 hour close down here, but then the very next 4 hour candle, we get a close back above it, then I would expect, like we did last week, to see continuation to the upside. If we don't, however, then I would expect to see this thing to fall down to the next level of liquidity, which for me would be right below here. So it'd probably be around this block right here. Bam. So that's where I would be looking. If not that, then this obvious fair value gap right here. But there's a lot of volume in here. How do I know? Because there's massive volume going into it. Tried to push it back down. Didn't work. Pushed right off and launched right off. Now, this was a news catalyst type of event. Even though it really wasn't the news, it wasn't real. It still happened. This still happened. I try to act like it didn't. It's really hard to act like it didn't happen. But definitely anything below this, and I am personally going to be buying. However, take this out, or take out this fair value gap right here, and then I'm possibly looking for lower prices. But once again, I'm looking for midpoints on wicks. So let's go back. Let's see where we are. So let's go back to the daily. So that's a daily fair value gap. Let's add another one in here because it's obvious. So why not? Fair value gap. And then, of course, this would be considered a fair value gap as well right here. All possible downside targets. Once again, if I'm on the day, these are all daily fair value gaps. If I drop down to the 4 hour and drop down to the 4 hour and I get a close below here and then a confirmation close below it, then I would expect us to head down to the next pool. Then, if I get a close down here, maybe we come down, catch a wick, and then move back to the upside. This is about 27K. This is 27,686. 29K, basically 29.2, 29.5, just to give us some round numbers, an idea of what we could be looking at. Then we drop below here and we move down to this area of liquidity here, and I would expect us to fall down into this fair value gap right here. That is the absolute worst case scenario. But even if it does come down there, if we get a positive reaction off of that, good. Falls through it, bad. But I don't even see us really coming down this one, but I don't really see it right now. I need more stuff to happen up here. I need price action to develop that suggests that we would head back all the way down there. Right now, I'm not seeing it. Right now, we're clearly battling up against this whole thing up here. That's what we've got to get through. So now we're on the 4 hour. So let's go ahead and get rid of these boxes real quick. Let's get rid of that. 4 hour down to what? 15 minute. So upside target. Let's see if we could have. All right. So there's the midpoint on that one. Drop it down to the 15 minute. Got rejected off of it, off of that wick, off the midpoint of that wick. That should have been telltale sign, short. Right there. I mean, it really is that easy. Where's your target? The lows. Where to go? The lows. Not the hardware store. Wow, it's been 30 minutes already. Yeah. Let's see. So that's our 4 hour high right there. Where's the 4 hour? Where's our 4 hour local low on our wicks? It's going to be this one. 1, 2. Maybe this one right here. I'm going to take this wick. Maybe even this one. But this is the one that I would see to seek. I would be seeking the soonest, if that makes sense. I wouldn't be seeking this one. I'd be looking for this one. If we got a 15-minute candle body close below this line here on the 15-minute, and it was showing that that move down was strong, and that we don't immediately take it back, then I would expect us to move down to that lower wick that was created off of this down move right here. With that down move, I mean, it's 2 candles. I would probably be looking at this last down candle here. Actually, there's a whole block of orders right here that I would definitely be looking at. This whole block right there. Because you can see red, green, green finally gets going. If I see a block of orders like that, that's going to be something I'm looking for. And look, we broke out of that, and then we came right back down and tapped that order. It's basically an order block. Came back down, tapped that, and then kept going. So that's definitely going to be somewhere that is a point of interest, because that is somewhere where the market drew to and bounced off of. Now, what am I looking at for getting down there? Actually, let me get that back. Now, I am on the 15-minute. Let's get rid of this real quick. 15-minute. We have this wick up here and this wick right here. But we also have a fair value gap. I would probably take this and just run this across. That's came up, dug into it a little bit, but still got rejected. Last up candle. That one's probably going to be the one that I'm going to watch. I mean, I'll have my eyes on both of these for sure. But this is what I will personally be watching. that was the last push of buyers. Let's just take this wick because this is where we're going to see the most buyers trapped, is in this wick up here, right? So that's where I would expect a draw on liquidity to be, and then a move to the downside. We do have this candle here. I need to take that off. We do have this candle here that broke this uptrend, broke that, closed below it, and went from support to resistance, and has been holding ever since. I want to move that up. Broke, closed below, perfect. So this is my displacement candle. Displacement is just fast moving, consecutive down or up candles. That's what I would consider it, 3 or more. A displacement, and it takes out a swing level. So the swing level being the pivot point on this move. Get out of my way. So come up that high there, the pullback right there. That's a pivot point. So we broke that, broke it hard, even took out this low, came back, and then found resistance right back at that level. So this would be a pool of liquidity for me that I would be looking for. So this is a fair value gap. And a fair value gap, for anyone that doesn't know, is 3 consecutive candles, okay? And the difference between the wick of the first candle, the lower wick in this case of the first candle, and the upper wick of the third candle, fair value gap. And then on the low end, if I can find one on the low end that are green, of course, it's not going to make it easy. I want to see an easy one. Here's an easy one. So we've got upper wick here, lower wick here. First candle, second candle, third candle. We've got that. It's that space between those 2 wicks. Fair value gap. So that's your fair value gaps right there. Fair value gaps are nothing more than imbalances in the chart. What is an imbalance? An imbalance is an imbalance of orders, meaning price moved so quickly that all the orders could not get filled within that candle. So we come up, we tap, it's too much pressure on the market, push down. So what I would be looking for is a draw to this, and then a move back down to the downside if I am bearish. If I'm bullish, I am seeing this fair value gap as something that could project me to the upper bounds of this range. Okay? How do I know which one I am? Right now, we're just in consolidation, so it's kind of difficult. This is where you kind of want to maybe let the market play itself out and show its hand. Hopefully see a push up. Then once you get up into this fair value gap, then you will see what kind of reaction you will have. We drop it down to the 1 minute because 15 minute, 1 minute goes with the 15 minute. And then we start to see, all right, where could we possibly go from here? Ooh, I see a little space right here where we don't have candle bodies touching. Now this, oh, well, it is on Coinbase, and it is spot, so it's not perpetual. But I do see a space here. I don't know if you can see that, but this space right here, probably even this, oh, there's even a little space right here between this wick and the top of this candle. About $30,077. That is a volume imbalance. There's basically nothing there. That will need to get filled. There's a bigger one right there. $30,067. So that's where I am personally considering taking a short from this coming week. We do have imbalances up here. We did have a break of structure here. So if I come over here and I take my magnet off, got that low there. This candle is the one that broke this structure here, but that's not a major swing level. This would be the major swing level for me, and that's why this whole actually the fact that there's like 1, 2, 3, 4, 5, but this wick, I wouldn't count that, so I would start from this one right here because that took care of these orders in this block or in this candle. So I would count these 4. Maybe even just these 3. This one's almost taken that one. So what I am going to do is I'm going to look at this. I'm going to go from this wick down to this wick. I thought I turned on the magnet. This wick down to this wick. This is going to be something this will be a level that I'll be watching. If not that one right there, because that's a nice big candle right there for 1 minute anyway. But yeah, let's go ahead, draw that across, and let's see what it looks like on a higher time frame. Let's go ahead and go to the 15-minute, see where we're at on that one. So that's basically digging into that right there. So I can go over here. Let me turn on Trader's Reality real quick, and let's see. Now, I don't see, there's no volume, big volume in that candle right there. Let's go down to the 5-minute and see if we can see something. All right, so we're at the top of this wick here. So that is telling me that that's probably going to be a pretty good point of interest. That is also just noticed. Look, we also have a fair value gap right there between these 3 candles right here. A lot of volume did happen in this candle, a lot of indecision. We do have the midpoint of some wick. Is this the 4 hour? Nope, not 4 hour. 1 hour. Yeah, 1 hour. No. 15-minute. This is why I usually color code these things. But yeah. That's just a fair value gap. Okay, fair value gap on the 15-minute is what this is. Let's change you to green. Fair value gap on the 15-minute. So what we could see, we do have the psychological high up here as well. So we're getting a lot of confluence up here. So that's definitely a level I would be watching this week. Let me make this a normal fib. Now that my rectangles have a midpoint, I no longer have to have my fib do all that crazy stuff. So when I say crazy stuff, I mean have it expand out. Well, I used to have it expand out. Oh, I didn't pick the fib. Yeah. Instead of having that, I don't have to do that anymore. So let's go in here. Let's change this. Let's reset this. Apply the defaults. Let's stretch this out. I don't think the golden pocket's going to be here by default. Let's get rid of all the noise. We don't want the noise. I'll keep the 786. Get rid of this. 618, we keep that. It's part of the golden pocket. Get rid of all of that. Let's add a 0.65. Now let's make this yellow and make this one yellow. Why does it never does what I want it to do. on this thing, I swear. Oh, we got some movement. We got some movement. So that's your golden pocket, and it's laid right in there. So a lot of confluence for that area right there, right above, basically between 30,000 and 30,100. I would even go so far as to say, no, 30,100. That is an area of interest for me. I would kind of expect a rejection. That is somewhere I'd be looking to short from, basically. That's somewhere I'd be looking to short from. 15-minute down to the 5. What do we have? We do have a high volume candle right there, right at that 30,043 mark. Let's drop it down to the 1 minute. I haven't looked at the volume on the 1 minute. See, that all got taken care of on the 1 minute. Up here did not. Beginning to wonder if it will come up. Generally, well, what are we looking at? So we are in an area of consolidation currently. We're in, let me just draw it out, take out. Keep watching me in the future videos, and see how I look at things and how I work things, and then everything that I just went over will hopefully gradually start to make more and more sense. Hopefully I didn't miss anything too important. I don't think I did. But that's just kind of a way when I sit down at the charts, and you can see, I mean, it's taken me over 40 minutes just to do all of that. So it can take some time, but the weekend is when the best time to do this analysis, because it can help you set your bias for the week ahead. And because of everything that I just went over, I would expect a move to the upside to be a fake out, and I would expect us, and also knowing what's about to happen in the market has as much to do with psychology and news as it does with the charts. The news doesn't matter on a day-to-day basis. However, if I know that the FOMC is on November 1st, Wednesday, next week, then I can start to kind of build a bias for the week, for the next 10 days leading up to the FOMC. Now, for me, I believe, and the market believes, that there is basically no chance of a rate hike, and that we are sitting at 99%. Now, I haven't looked this up myself. Let's see, CME rate hike probability, CME Fed Watch Tool. And it's gone down a little bit. It was at like 99%. Now it's down to 96.1%. So we'll monitor this throughout the week and see what the market seems to be thinking. Right now, it's still looking like a pause. We're going to be getting a pause. So what does that mean? That would be the second pause in a row, which hasn't happened yet. So we haven't had 2 pauses in a row yet. It'd be the third pause of the year, 3 out of 4. And it would also eliminate what they had already put in our heads, which was to expect one more rate increase for this year. If we don't get it, what is the market going to be? extremely bullish. The market will be extremely bullish at that point. That doesn't mean that it won't initially fake out to the downside. As a matter of fact, it's almost guaranteed that will happen. Not financial advice. Nothing is guaranteed, of course, but that is what could happen. So expect it, be prepared for it. Be prepared for any kind of drop. More than likely, you will see it in the charts before it happens, but also at the same time, I'm kind of just expecting in general for this market to move sideways for this week, leading up to that FOMC, sideways and down, really, and then possibly coming down here to this fair value gap level down here, maybe around 29K. And then once we get down there, FOMC, Powell says something bullish, where there's our FOMC right there, right there. Close enough. Powell says, we're going to pause again. Pew. Right? Maybe immediate. We're going to pause. People are going to be like, well, I thought this was bullish. I thought this was bullish news, but we're crashing. And then V-bottom recovery. Bam. Gets us out of here. Because what's going to happen over that week, and this is going to be my plays, right? If it is going to be bearish, we'll find out more when we get information, when we see how the markets open up on Monday. I think I'm starting to take an approach where I just don't trade on Mondays. I let Monday play out and then play off of that, because Monday would tell me how the market is going to do for the week. So Monday, if we do get that push up, but we do fail to get that candle body close above that weekly wick from earlier in the stream, that midpoint of that wick, and it fails, then I would expect to see continuation to the downside, and I would expect, just over the week that we just work our way down, right? And then we get a final push down and then a move up on the FOMC. Now, why is it important to establish this kind of bias? Well, if I'm expecting the move down, what can I do throughout the week? What kind of plays am I going to make? What am I going to be looking for? I'm going to be looking for shorts. I am going to be looking for a quick push up to the upside to grab liquidity to pull price down. Okay, so when I'm on lower time frames, lower than the 4 hour, I would expect a quick push up into a higher time frame pool of liquidity, and then a push down to take out the lows. And I would expect it to do that over the course of the week. Now, of course, this would set up over the next 10 days, I should say, rather. This would set up some kind of, bullish flag up in here. So that is something that would be really cool to see. A lot of people would also consider that our pattern traders would consider that a cup and handle with the blast off. So a lot of confluence just in that alone. That'd be nice to see, right? If I take my fib tool, let me come up to here. Then we come down. Maybe we come down to the golden pocket. Maybe we only come down to the 50. A bounce off of 50 would be really strong. So let's come back over here and let's look at this. Now, for the week, like I said, what I would be looking for is high time frame points of interest, and then shorting from there. And then taking out the lows, taking out a low, and then fading it back up to either a high time frame point of interest, or if you're doing like an intraday trade, shorting or fading it back to the VWAP. So that's just what I'm looking for. If there's anybody that wants to come in here and do your charts. Let me open up Discord real quick. How's everybody doing? Have you enjoyed today's show? All two of you? Actually, one of you is me. I'm watching myself. Well, let's see. I think this has been one of my better breakdowns. I like it. Probably because you guys weren't over here in the chat causing a whole bunch of ruckus. Discord always takes forever to load up. In the meantime, hit that like button. Subscribe to the channel. If you're new, hit that notification bell to be notified whenever I create new content and when I go live. Discord is open. Good, Melissa. I am so happy that today's swim has been helpful. Let's go over here. Anybody in swim? Does anybody want to come in to swim? Anybody? Why does it automatically have me connected in there? You didn't understand fair value gaps, now you do? Oh, sweet. Just so you know, if you come over here in the Beach Club Discord, you can come on over here to Price Action Concepts and click on that. And inside of here, I have breakdowns. I need to add a whole bunch of stuff in here, but fair value gaps, I believe. Well, no, I started a thread on the, so there's a thread right here. If you just click on fair value gaps, it'll pop up a thread and it'll show you how the fair value gap works. Now it uses the Wix, so it's going to be different than on this, but this is old stuff right here. But yeah, you can kind of see there's market structure shift in here. It shows you, helps you understand market structure shift. And I'm going to add a whole bunch of stuff. And this is also your market maker model. This is the market maker buy model. Then you just basically flip this upside down and that's your market maker sell model. So that's a little complex, but so we'll just stick to the easy stuff for now. But yeah, one of my favorite trades to do is find an area of consolidation. Let me come down to like the 1 hour. Find an area of consolidation, a long area of consolidation, something like this, something a little more prominent. The 1 hour is not going to be it. It's 5 minutes. Can't see. There we go. All right. Here's one right here. Take a high or create a new high. Basically, take that high. Then we get an area of consolidation. Then we come up. What do we do on this wick? Let's see. Whoops. Boom. To that midpoint. Got rejected. Dang. Well, let's come up here. This is where it's supposed to be. There we go. I mean, right to it. If you short from that, aim for the lows. Bam. Massive. Massive. We do have these. This one right here. This is a high volume candle. That's why it's highlighted in green. But this was an area of consolidation after taking a high. Took a high up here. Let's get rid of this. Well, no. This would be our point of interest, our draw on liquidity right there. So we have our high distribution. Then we have consolidation. Okay. This, and inside of that, see, everything is fractal. Inside of that, we have manipulation to the upside, and then we come back down, right? So we have a manip here. So what makes it manipulative? Well, what happened is we took out a low, this low right here. We took that out, and then we immediately ripped to the upside to take out this high. Okay? Even take out this high. That tells me that is a manipulative move and to expect prices to come back down. We do come back down ever so slightly, get another manipulative move to the upside, get people super bullish again, only to rip it right back down and take out those stops. And this is just a classic. This is what is it called? A Judas swing in ICT concepts, and we have our consolidation, and then our manipulation, and then our distribution. Consolidation, manipulation, distribution. You'll see it all the time in the charts. It'll be something like this. Let me get rid of the midpoint on this. There we go. That was wild. I was watching it live. Yeah. Yeah, so consolidation. Why are you? There we go. So we'll typically see something that looks like, let me just do this, and then a drop down, and then a big move up. So this happens so often, as we will get some kind of consolidation, right? A drop down, and then a manipulative move to the upside, and a lot of the times a manipulative move back down to the downside. So consolidation, break down, break the lows, shoot back up, break the highs, shoot back down, break the lows again. Manipulation is a killer. So that's a standard, pretty standard pattern. Always be on the lookout for that. You see any kind of consolidation like that, look for the move up to take out, to hit some kind of point of interest, and then come back down, rip down to the downside. But yeah. Well, we're up at the hour. I'm going to go ahead and call it a day. Right now, I'm just looking for, I expect a pullback for this week. This candle right here, I would be watching the midpoint of this candle here, this last week's candle. Midpoint, let's change this back to yellow. There we go. So I will be watching this one on the daily chart. And that wick as well. I'd be watching this wick for if on the daily, if on the daily we get a close below the midpoint of this candle. I think that's what I was trying to say earlier in the stream. So yeah, get a daily close. This is weekly, so I need to scrunch this in a lot. So, daily chart, if I get a close below the midpoint of this weekly candle here, then I will expect lower prices. However, if price holds on the daily chart, holds that midpoint, I don't care if we get wicks below it. If it closes above it and holds it, then I would expect us to continue higher. That's going to be it for this video, guys, for this stream. I love you all. Thank you so much for watching. Please join the Discord. Get verified. It's real simple, easy. I love you all. I'll see you in the Discord and see you in next week's swim. Hit that like on your way out. Subscribe to the channel if you are new, and hit that notification bell to be notified for whenever I create new content and when I go live. Thank you for watching as always. I'll see you in the next video. Share with your friends, comment, all that good jazz. Ride the waves. Peace.
CJ Nonsense. CJ Nonsense.